Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 12th of October, and I see flashing up on the slides on the podcast, we have our survey results from the forum in Fujairah yesterday, where there was a somewhat bullish outlook for oil prices in the forecast for the fourth quarter, with general expectations being that they would be higher than the average that we've seen in the first three quarters. Despite the pullback in recent weeks and now the sort of bump up that came with the terrible tragedies in Palestine and Israel, that it does look like the price is regaining some upward momentum. Let's kick off this morning with Amina Bakr, the chief OPEC correspondent and Dubai deputy bureau chief at Energy Intelligence. Amina, we had the OPEC Secretary General with us in Fujairah over the last few days, and he's sort of speaking quite, continuing the narrative of sort of robust OPEC approach to market management, and no signs there that not that he is speaking on it because it's not his domain, but ultimately the Saudi voluntary cuts into the first quarter now is really where everybody's focused. What's your outlook for them continuing?
Thank you, Sean. It's very difficult for OPEC to be commenting about the very tragic events that you described that are happening in the region. Usually they try to avoid having their policy politicized, although, it's very hard to detach politics sometimes from oil policy. But just given the volatility that we're seeing in the oil price, we saw, following the Hamas attack, oil prices were trading again above $87. Today we're at 85 something for Brent. It's a very volatile environment, a very fluid environment on the ground now. Nobody really knows what's going to happen. So for OPEC Plus, I think they're just going to continue their very cautious approach to the market. They're going to keep those group cuts in place like they have until the end of 2024. And for the voluntary cuts, I still think they're going to be sticking to the plan of having them until the end of this year, perhaps even into the first quarter, until they see signs that this market is less volatile, that they see stock levels are down, and a recovery in demand, that we will start seeing an unrolling of the voluntary cuts, and then we can start discussing the group cuts. But that's the kind of sequence.
Andy Critchlow, head of news at EMEA S&P Global Commodity Insights. Andy, the market today is somewhat reacting, if you want to call it that, little reaction, but a little soft this morning in opening trade in Asia. The reporters obviously always looking for a reason why the market's moving, but nonetheless, inventories climbing in the US. Inventories back at the front and center on the fundamental side, but obviously geopolitics as well. But fundamentals, inventory building in China, inventory building this week in the US, but ultimately on a declining wicket in the US. Where do you think fundamentals are vis-a-vis the direction of travel of this market?
Well, our latest analysis would suggest fundamentals actually are quite strong in the medium term. We've upgraded our global economic growth forecast to 2.6% growth this year from 2.5%, so that's a slight uptick. What you're seeing in China as well, we're seeing restocking across the board, not just in the oil complex, refineries and also crude stocks, but also across a broad range of commodities. So, iron ore, we've seen a bit of a bounce in the IODEX ahead of Golden Week, when industrial customers in China tend to stock up. And then you have all these bearish or bullish signals out of the Middle East now related to geopolitics. My colleague Jim Burkhard just flagged how 500,000 barrels a day of uranium production or exports could be threatened by the current geopolitical crisis in the Middle East, especially if we see a tightening of US sanctions on Iran, Although there was no official policy statement, certainly the sieve that the US uses to restrict Iranian supplies of crude to the market was definitely kind of opened up a little bit over the last 6 months. And will we see that tightened as a response to the political crisis now in the region?
Max Torres, managing partner at Plata Energy. Max, we're sort of, well, we're trading December contracts, which puts, delivery now for the market, at least into the new year. So we're really talking 24 from the point of tangible barrels and what you're going to pay for them when they get delivered. And it seems to me the story of 2023, as much as anything else, is the Americas and the growth of non-OPEC plus oil supply. Your thoughts on the outlook for that going forward? The big news overnight, of course, that ExxonMobil spending big dollars on acquiring Pioneer Natural, one of the leaders in the shale play. Your thoughts on non-OPEC supply going forward and its impact for the market?
Thank you, Sean. Excellent question. Yes, I think we all are kind of shocked by the acquisition of Pioneer. Pioneer has been a long-standing company here in the Permian. And Exxon, I guess, they've been building up a position, and they want to basically control the shale play. We all know shale production here is about 66% or almost 70% of the production of the U.S., which is close to 12 million barrels right now, coming out of the U.S. So basically, in a nutshell, I think shale production is strong. I think this acquisition, the signals are that Pioneer shareholders are very happy. I think the share was $2.53 per share, so I think right now it's about $2.45 or something, so about 15%, jump for the Pioneer shareholders. Exxon shareholders not that happy. I mean, basically, the share for Exxon is kind of flat or downwards. But overall, I think it's a great move by Exxon to control, a very large chunk of the Permian, the shale plays. So production of the shale is strong, is climbing. I think the U.S. consumption is kind of flat. So I think we're going to see growth.
What about the rest of the Latin? Guyana, elsewhere?
For sure, Latin America has a few hotspots right now. Guyana is Exxon again. Guyana, is planning to be producing close to 1.5 million barrels per day in 2030. That's an impressive growth from 0 to 1.5 million barrels per day. It's going to be probably the second or the third largest producer, probably third largest producer in Latin America. So Guyana, impressive. Guyana, Suriname, both. We've seen Total sanctioning development in Suriname. They're talking about 200,000 barrels of oil per day. That's Total and Apache. That's Block 58. So very impressive growth in Guyana. Very, very impressive. I have my hopes that Vaca Muerta in Argentina is gonna be adding on the supply if things go. I mean, there's gonna be elections, next Sunday. Not this Sunday, but the following Sunday, the 22nd, is going to be elections in Argentina, and my hopes are that we're going to see a political change there, and probably we're going to see some positive supply signs from Vaca Muerta. As we all know, Vaca Muerta is a very, very large shale play. Is the same scale and size of the Permian. So if things go right, I think we could see very good news coming out from Argentina in a couple of months from the supply side. Elsewhere, Brazil. Yeah, go ahead. Sorry.
No, I was just going to jump in and bring Amina back into that, because inevitably with all of this new supply, Amina, OPEC plus may have no choice but to keep cuts in place when they're seeing we've talked about Iran obviously come back quite strong this year as part of OPEC legally, but obviously not part of the supply restraint. That with an outlook for 2024 4 that's a little bit less in demand growth, to 1 to 1.5 million barrels a day of demand growth next year, which seems to be the consensus. All of this new supply from the Americas may compel OPEC and Saudi Arabia to keep its voluntary cuts in place. Your thoughts on the demand growth for the year ahead and how that could impact OPEC policies?
Yeah, for sure. If you have non-OPEC supply growing as much as we expect it to grow, and at Energy Intelligence, we do expect a big growth in non-OPEC supply. In fact, like I interviewed Vicky Hullab from Occidental during ADIPEC, and she's also very positive about growth in the Permian. So yeah, a lot of growth happening, but what you're hearing from OPEC, Sean, and I'm sure you've heard from the Secretary General, that they're really pushing the narrative of that the world needs to invest more in upstream. We need to have more growth in upstream, not just within the OPEC plus countries, but from outside OPEC as well. And that makes oil remain relevant. So I don't think that they are kind of fighting the fact that you're going to see growth from outside the group. They just want to see more growth in general to make this commodity as relevant as possible for future demand. I think they believe the demand is there. Perhaps the numbers we're looking at, the Secretariat is looking at, and we're looking at, are a little bit different, but they just want to keep that momentum that everyone needs to continue investing in the upstream sector. And Minister Mazrui, if you remember at ADIPEC, Sean, he said within the OPEC plus group itself, they've lost 4 million barrels per day. So that needs to, again, be compensated from somewhere, and perhaps it'll come from outside OPEC.
Andy, just to leverage on that, your thoughts this week or early, obviously it seems like a long week, primarily because we were drowned in producing this forum the last few days. But on Monday, and again at our forum on Tuesday, the OPEC Secretary General unveiled the World Oil Outlook with the acronym WOO, which is a sort of a funny one, but nonetheless, that's what it is. But I'm just wondering, any takeaways from you from that report, Andy? I was particularly struck by the revision, the demand growth revision upwards in 1 year. OPEC seeing a 6 million barrel a day increase in demand out to 2045, but nonetheless a significant change from only 12 months ago.
Yeah, I mean, it was quite chilling actually to see those numbers, 116 million barrels a day, because that's adding another Saudi Arabia plus to global supply. Where does that come from? Even with all the projections of proven, unproven reserves, it's a staggering number when you look at the headwinds that the oil industry is facing. One of the things that I really picked up on at ADIPEC when I was there in Abu Dhabi last week, talking to a lot of the engineering companies, the suppliers into the industry, is the cost of production in the Middle East. And I think it's something that we're not talking about enough. The perception that the Middle East is a low-cost producer. Yes, of course, it still is compared to other parts of the world. But you go to Oman, for every barrel of oil they're producing in the south now, they're producing 15 barrels of water, brackish water, that has to be disposed. Their production costs have gone up exponentially over the last 10 years. What you've seen in Oman historically, which is an old legacy producer in the region, you're now starting to see that elsewhere. So in Saudi Arabia, for example, a country which has historically been, very proud of the fact that it's the lowest cost producer in the world. They quote a number of anything between, I think, $1 up to $5 a barrel production costs. Now they're having to use things like electric submersible pumps, downhole, to lift oil in some of their fields. That's the first time Saudi Arabia's ever had to do that over the last few years. So even in Saudi Arabia, their cost of production, they're having to use enhanced oil recovery. They're having to use artificial lift to get oil out of the ground. So this, we talk about Brent at 85, 88, 90, $100 a barrel. One of the problems I have with that definition for crude prices is that it's nominal, right? So it doesn't factor in inflation. So actually, that $88, $85, whatever it is that those Gulf producers are taking in, that is not their purchasing power. So it's basically the same as we were maybe 10 years ago in real dollar terms for these Gulf states, or in nominal dollar terms for these Gulf states, because actually when they go out and they spend that money, and they use it to balance their budgets. That dollar isn't worth what it was.
Well, especially when you think, Andy, that at the moment they are spending aggressively on expanding capacity here in the UAE, targeting 5 million barrels a day by 2027, as well in other countries in the region. Very expensive to be going to the supply chain at the moment.
Incredibly so. You know, projects have in some cases tripled in value what they're having to actually spend to develop these large scale projects. And then you have the risk baked into that where is the oil market actually going to be in 15, 20 years time? Because, you know, the payout from these projects is long term. And it comes back to what I call the OPEC paradox. You know, OPEC's success is keeping oil prices high to sustain, or high enough to sustain, the national budgets of its member countries. But in achieving that goal, it stokes the fires around the world, in the Permian, in Africa, in other basins, to stoke more production. So it's this never-ending cycle. So its success is also its downfall, and that's what we saw back in the late 2000s, 2010, with the boom in shale and the Permian. We're starting to see little seeds of that now, where Max is in Houston and in that basin now, but probably not to the same extent, right?
Well, probably not to the same extent, but perhaps in another geography, which is what Max was just about to talk about when I cut him off earlier. So I would like to return to that question, Max, on the Vaca Muerta of Argentina, which is, as you say, a shale opportunity the size of the Permian Basin in the United States. What's the likelihood that Argentina can indeed get this developed, get some of it developed? Can it be a game changer for the region?
Yes, Sean. I think Vaca Muerta comes down to the political scenario that we are facing for the future. If indeed, as all the polls and everything is showing, we're going to have a government from the right. Most likely we are going to see some sort of new investment coming in. Some of the major companies, revamping production. Exxon is already there, Chevron is already there, Shell is there. So basically, I think these companies, these large companies, they can start pulling some strings and getting some investments in the ground. Right now, it's producing something like 250,000 barrels of oil per day. So about half of the Argentina's production is coming out of shale. But, it can easily jump to 1 million or 1.5 million. So I think the potential is there. The rock is very high quality. It's probably better than the Permian. The basin is as large as the Permian. So basically, I think everything comes down, as I said in the beginning, to politics. If the politics are right and we get the right.
What about the access to capital? I mean, is the politics the big block to that? Even with the right politics, can Argentina, they don't have a great debt record in sort of paying their bills.
No, absolutely. It's a country that needs to be, rethinked and refounded somehow. Has a lot of economic problems right now. Inflation is close to 100% annually. So basically, it's a country with a lot of problems. But again, with the right framework and the right, direction, I think things can easily change.
Let's go to the survey question, which sort of tackles where I started with Amina on the outlook of where Saudi Arabia goes with their plans in the new year. Do you expect Saudi Arabia to extend its voluntary 1 million barrel per day supply cut through Q1 of 2024? Yes or no? Amina, I was kind of struck, just picking up on the point Andy was referring to there, the shale, and also Max referenced it. But the Bloomberg story this morning, the way they put this Exxon acquisition of Pioneer, that they brought OPEC into it. OPEC's greatest opponent is disappearing. I remember when Andy and I worked at Bloomberg, if you could get David Beckham into a headline, you'd get more hits. I'm wondering, is this a case here? If you get OPEC in the headline, more people will read your story, or is this indeed an OPEC relevant story, that this acquisition of the end of these smaller independent oil producers in the shale patch, which were a headache to OPEC, are now being swallowed by the big actors. Does that, you think, make a difference to OPEC?
Not right now. I think I agree with Andy. I mean, shale used to be, and in the Naimi days, we remember all covering that. I mean, that used to be a headache for them. But these days, Sean, I feel like they, I mean, it's not brought up in conversation. It's less of a concern. And I see the bigger concern is that they really want upstream to be relevant. We're talking about the energy transition now. I feel like it's a bigger pressure, and the messaging that we constantly keep getting from OPEC officials and the Secretariat is that oil will remain relevant for decades to come. And in order to do that, we need to see growth from everywhere. So they're less concerned with shale being a competitive force. So I think in this case, with that story in particular, yeah, maybe it's just bringing up, if you have OPEC in a headline or in a story, it attracts more attention, or you're drawing, it's these days, and in this context, I don't feel like it's relevant or seen as a rival per se.
Andy was good at those Beckham headlines, I have to say. But other headlines grabbing today, Andy, is our good friend in Moscow, Mr. Putin, who was speaking yesterday at the Energy Forum there, and the sort of signals, if you like, that I want to touch on one or two things he said, but starting with the idea that the continued relationship with Saudi Arabia, the continued relationship with OPEC Plus, everything remaining in place. Your thoughts on what it signals for that into the new year, the Saudi Russia partnership and OPEC Plus?
Well, it seems to look very robust at the moment, right? Both sides have reiterated their commitment to OPEC Plus. Both sides signal that this is a long-term relationship that can be counted on. But as Amina said at the start of the podcast, that although OPEC, stresses that it's not a political institution, that it separates politics from policy decisions, it is profoundly political, right? And when we spoke on the sidelines of ADIPEC at the round table, I said then that, for me, 2024, the big stress, strain, challenge for OPEC Plus will be what happens in Ukraine. And let's not forget, we're going into the third year of the war in Ukraine, which is staggering. The biggest war that Europe has seen on its borders since World War II. It's had a profound effect on oil markets. There is a theory, a train of thought that would suggest that when Russia got into OPEC Plus in 2015, it was setting the stage economically for its invasion. So if you get a conclusion to the war next year, the West's appetite to continue funding Ukraine in terms of weapon supplies, that's already strained. We've seen that in the US in terms of the implications it's had for rolling over federal funding, etc. Will that continue into election year if you see a conclusion to that war that was basically a ceasefire and a negotiated settlement, does Putin and the Kremlin regime, does its priorities then change in terms of OPEC? And remember, one of Putin's key allies, Igor Sechin, who runs Rosneft, is not naturally an ally to OPEC. And prior to the Ukraine's invasion, on several occasions, certainly when I reported on what he was saying or what he was doing, would actively speak against OPEC. So, there's not one unitary voice within the Kremlin for this outside, Putin and Alexander Novak, who, has, the ear of the president there. You have to look at
speaking just on other headlines, not that it's a pick on headline day, but one does on occasion. The Reuters headline, Putin says Germany is shooting itself in the foot. I'm not sure I would have used that as the right headline. By not buying Russian gas, however, is the point. Has Putin got a point here, Andy? He's just, the actual quote is, "It's some kind of nonsense that Germany's willing to buy Russian gas through that comes in a pipeline through Ukraine, but not reactivated, nor not to reactivate or to certify Nord Stream 2." Your thoughts on where that Europe-Russia energy supply thing? Are we seeing smokes and mirrors here, or what's your thoughts on the outlook for this sort of boycott, not boycott thing to sustain through into next year?
Well, I mean, European gas stocks are at a historic high at the moment, and part of that is a function of, you know, we've had a historically warm October.
I bet you're wearing some sunscreen on that nice head of yours when you're going out cycling. Who would have thought
exactly.
in October you got to wear sunscreen in the south of England?
Yeah. Normally, when I can judge the oil market by how many layers I have to wear when I ride my bike. So it's gas stocks are historically high. Europe has pulled every lever it has to source new supplies over the last 2 years. It's adjusted. Do I hear rumblings that politically it would be something acceptable to reopen Nord Stream to again reattach Europe in terms of energy security to Russia? I think that's a big reach for any European government. I think Europe is still heading in the opposite direction.
But what about the backing of? I mean, as you said earlier, the Ukraine conflict, where this counteroffensive that got so much headlines, a bit like the year of two halves we had in the oil story, it just never arrived. Where the momentum is in support of Ukraine's position vis-a-vis its war with Russia.
Yeah, well, I think that's the paradox. The paradox of the success in European energy policy, because when we had record high retail electricity prices in Europe and especially the UK last winter, there was significantly more grassroots political support to back Ukraine, because people wanted a resolution to this thing. They wanted it over because they saw that as being the solution to these high energy prices that everyone was paying at a retail level. Now that's gone away. The troubles of Ukraine seem to have fallen to the back of the long political list of concerns, and so tying that back to Germany, the idea that Germany could re-engage with Russia in terms of being an energy customer, I think it's a big reach, because I think they see many more alternatives around the world, whether that's
as long as
LNG
as long as the winters remain nice and warm and you're wearing factor 50 in October, you don't need to be too concerned, I suppose. The gas need is dissipated, and they were lucky last year, and maybe they'll be lucky again. Max, I wanted to get your thoughts on the other factor. Obviously, the geopolitics of the Middle East is quite elevated at the moment, but what about in the US and the election cycle for Joe Biden, and I mean, putting aside the nonsense that's in the Congress at the moment, but where does oil policy go, do you think, in the US? What can they do? The midterms, we saw the Biden administration release a lot from the strategic petroleum reserves. Do we expect that to be a factor this winter going into the first quarter?
Apparently not. I mean, I was reading some reports that prices are going to remain stable throughout the winter. So apparently not. Apparently the policy is going to remain the same. And there's a lot of, obviously political turmoil here in the Congress and the Speaker of the House and everything else. But I think on the other fronts, I think things are, rather quiet, and I don't expect to see much of a change on the supply or the demand side here in the US. At least that's what I've been reading the last few weeks.
Well, the EIA, the EIA are saying that they expect that the gas prices this winter are going to see US households with smaller bills than last year. Of course, last year was an exceptional situation.
I agree. That's the same reading that I was referring to. I think they're expecting bills to be the same or smaller, meaning that the gas price is going to be probably on the downside. So we'll see. I mean, all depends on the geopolitics again. I think the European relationship with Russia, and the supply is going to be a factor.
Yeah, the Americans, I don't think will, the US will not want to give up that nice new market they've discovered in Europe. Amina, I want to get you the last word and your thoughts on the OPEC world oil outlook that Andy commented on a little bit earlier. Survey, overwhelming majority in this room at least thinks Saudi cuts extend through the first quarter. We'll post that on social media. But Amina, last word to you. Anything in the world oil outlook that you took note of that we should be paying attention to?
No, I think the main point was demand. I mean, this very, very strong outlook on demand, the 116 million barrels. I mean, that was the kind of highlight that everyone picked up on. But just a last word tying in what you were discussing previously, Sean, I feel that with the current geopolitical situation, that there's a lot of discussions about de-escalating. We're seeing Arab leaders all around the world trying to de-escalate the conflict that's going on. The US as well is really reluctant to bring Iran into the conversation here. Initially, we heard from officials saying that there is no evidence that Iran took place in organizing this attack, despite saying that, okay, yes, we are still enforcing sanctions on Iran. We haven't heard any more steps being taken to further, deepen sanctions or new levels of sanctions. So I feel like overall there is an atmosphere to de-escalate the tension. This might be linked to the fact that we're entering election season, and what we understand that even the discussions that happened before this conflict between Saudi officials and US officials on normalizing relations with Israel did not contain an element of oil policy. That's kind of a red line for Saudi Arabia. They've drawn that. They will do whatever is in their interest when it comes to that. So that's kind of a summary of where we're at the moment.
It certainly I mean, if you look to the markets for any kind of guidance, the oil markets are not believing Benjamin Netanyahu's fairly end of the world rhetoric, where and so one might draw some hope from that there's some sense that de-escalation is indeed going to win out here. Andy Critchlow, thank you so much for your time today. Max Torres, yours as well. And of course, Amina Bakr, as always, really appreciate your insights. Thanks, everybody. We'll be off for the weekend, early weekend for us after the crazy few weeks we've just had. Got to take a breather, come back next week. All the best. Have a good weekend. Thank you.